Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. When you tune into my show, you're going to hear about topics that are important to the home business community. Okay. So one of the things that we've really been focusing on is cryptocurrency. We know that the IRS is turning their focus towards cryptocurrency, looking for people who have not been filing, not been claiming their income, their capital gains, and they're looking to make up the tax gap. And so cryptocurrency is on the chopping block. And there's been a lot going on with that. And with today's video, I want to talk about the term DeFi. And the reason I want to do that, I think there's a misconception about exactly what DeFi is, what it does, and the level of anonymity that you have. And that was one of the initial draws to the cryptocurrency space to begin with, is that concept of anonymity, that I can operate financially and the government won't know who I am. And so I want to share this with you mainly as an education piece, especially for my other tax pros, and also for people who are new getting into the crypto space, because there are a lot of people out there that are putting out a lot of information, and a lot of it's just not right. It's not accurate. So that's why I'm here. All right, DeFi. DeFi stands for Decentralized Finance. And I have my notes over here because it's a lot. So I want to make sure I cover as clearly as possible in as short a time as possible. So essentially, decentralized finance is an alternative to traditional banking. You think about traditional banking. If you want to send money overseas, you got to go through wire transfers, you got to go through banks, you got to pay all these exorbitant fees, and you're really putting that in the hands of bankers. Well, with decentralized finance, you control those things yourself. Okay, you are not paying fees to a bank. You may pay some fees to a platform, but you're not. But the transaction is between you and the other person. There's no middleman. So decentralized finance is taking the middleman out and leaving individuals in control of their money. So it is an open global system. You know, cryptocurrency is everywhere. You can put it in one currency, and like dollars, and take it out in yen, right? So cryptocurrency is really opening up a lot of doors. It is allowing people to remain in control of their money, but also to move faster, but just this worldwide space. It gives you more control. It gives you more visibility. And so if there is an attraction to DeFi, then it's that. It's not this sense of complete anonymity. And with the increase in the acceptance of cryptocurrency and the use of cryptocurrency, it's opened up a lot of other different financial services. I mean, there are specific retirement accounts that allow you to invest in crypto in your retirement account. So, you're able to borrow against your cryptocurrency. So there's a lot that, with the onset and the popularity of cryptocurrency, that has opened up a lot of different doors for people to get away from the traditional banking systems. So you can go and you can lend your crypto, you can borrow, use your crypto as collateral for a loan, where with banking you have to show, before you get a loan, you have to show that you're able to pay it back. Well, in the crypto space, you just have to put that crypto up as collateral, and that's it. Your credit score, it doesn't matter. Do you have the cryptocurrency collateral to back this loan? So basically, if you don't pay me back, then you're going to give me your cryptocurrency. Okay, so when you think about some of the problems that exist in banking, and in the United States, we have this arrogance that every other country operates the way that we do, and that's simply not true. We have an FDIC, so if a bank goes under, we're FDIC insured up to a certain amount to get that money back. Not every country has FDIC insurance. If you put your money in a bank and the bank goes under, guess what? Their money is gone. So people in various countries are using cryptocurrency as a safer way to bank and use their money, and also as a way to be able to have access to the world. And again, it's that control. So the other thing that, with cryptocurrency and like cryptocurrency markets, they never close. Cryptocurrency is going on 365 days, 24/7. They're not shutting down for holidays and lunch and all that stuff. You can trade crypto at 10 o'clock on a Tuesday or at midnight on a Saturday night. It's always, open, always going. And, and that's what DeFi has done with cryptocurrency, to where it's an alternative for banks, right? Because, like I said, traditionally, if you wanted to send money overseas, one of the things that we do in America is we outsource to companies or people overseas. Who among us has not had a virtual assistant from the Philippines, right? Now, what did we have to do though? We had to use a system like PayPal to send money either in US dollars and they convert, or you convert it and send it to in their local currency. Well, with crypto and using that decentralized finance, you don't even have to go through all of that. You don't even have to pay all of those conversion fees and the additional fees with that. You can send it in the blink of an eye. And that's what is attractive about decentralized finance. But is it anonymous? And the answer to that question is no. While you may conduct transactions anonymously, right? Because you can borrow money and lend money anonymously where the two parties don't know who you are. But if the government really wants to find out who you are, it is absolutely possible to do. So you are not, buying and trading cryptocurrency and nobody knows who you are. That is absolutely false. And this is one of the things that Congress is trying to regulate now and increase. What you'll hear on the crypto streets is AML and KYC, where AML is anti-money laundering laws. KYC is knowing your customers. Okay, so the government is basically saying, hey, you people who are, the crypto platforms, you got to know your customer. That means you need to collect those social security numbers, names, addresses, verify, who you're dealing with. And they're trying to expand that, and that's what's causing a whole bunch of drama in Congress on this whole crypto law thing. So there's some stuff that still needs to be worked out with that. But just know that that's where they have their eye, not just to regulate the industry, but also to protect consumers. Because the one thing about cryptocurrency is that it is open to anyone. And your crypto can be stolen. And once it gets stolen, it's stolen. It's nobody's job to go and find it, right? Like we just heard about, who was it? The oil Colonial Pipeline, who got hacked, and the hackers demanded ransom in cryptocurrency. So Colonial Pipeline paid it because they like, hey, we need to get these oil lines flowing. It was cheaper to pay the hackers than it was to not have this oil going, right? Okay, so now the government was able to go and retrieve that cryptocurrency. Yay them. But we're talking about millions and millions of dollars, not just your little 10,000 or 20,000 that you just sent to, wherever in cryptocurrency, and nobody knows who they are. So again, the decentralized finance is about you being able to control your money, where you send it, and that's what it's about. It's not about trying to hide from the government. You can try to hide from the government, and it may take them a bit to find you, but they will. And as long as there's no statute of limitations on fraud, they got all the time in the world to find you while you're doing your criminal activities, okay? If you look at the Silk Road case, that is an excellent case with cryptocurrency. It took them a while to find the person behind Silk Road, but they did, okay? So that's really the long and short of what decentralized finance is. I'm making sure I covered the highlights of decentralized finance, but but the main thing is that you're not hiding. You may not know who you're necessarily doing business with, but you're not hiding. And it is never wise to do business and send money to anybody you don't know anyway, or have some idea of who they are. That's how these original scams, were set up in the first place. All the scams of I'm this prince and I'm trying to come to the United States and I just need you to be able to receive this money. If you just send me your banking information, I can deposit this money. That's how all of this, fraudulent stuff happens anyway. So that the scam part is not going away. So you still need to have an idea of who you're doing business with. It's just that, with cryptocurrency and DeFi, it makes it easier for you to exchange money without involving a third party. But that does not erase your reporting responsibilities. Okay? So I hope that helps you out in explaining what the concept of DeFi is, and understand that it's an alternative to traditional banking. It allows you to operate more freely with banking, because, if banks think that you're doing something fraudulent, making a fraudulent purchase, what are they going to do? They're going to cut your card off until you call and verify that you actually made this purchase. That doesn't happen in the crypto world. If you send that money, if you send that crypto, it's getting sent. There's nobody saying, oh, this person's a hacker, don't send it. That's not how this is happening. So there's no third party control there. It's just you and the person that you're doing business with, the platform that you're purchasing your cryptocurrency from. That's it. Okay? So I hope that helps you out. Thank you guys so much for tuning in to Home Biz Tax Talk. And we'll see you next time. Bye.